BHEL, the company's shares rallied in trade after CLSA waved 2 thumbs up on growth prospects. But not everyone is in agreement. Macquarie says the company is unlikely to make any profits in the foreseeable future. Anisha has more details. Anisha, why is CLSA getting so optimistic on the power capex cycle in BHEL?
Well, yes, CLSA did extend a vote of confidence for all the power generation equipment makers as they suggest that this is indeed the beginning of the new power capex cycle. Now, the report suggests that the orders for the power equipment has reached level of around 20 gigawatt, which is in fact as a 5-year high. They mention as far as the utilization level is concerned, the capacity additions are expected to peak in FY17, and that's the reason the utilization levels are just expected to improve from here on. Also, in terms of the increase, this has been led by the state generating companies, and most of these orders have been happening in the southern region. However, they do highlight that the sector is headed for a dichotomic situation, whereas the individual power producers might be stressed and underutilized, and bankers might struggle to get back their money. But it is good for the public utilities companies, and they would head out and give out the generation orders. As far as BHEL is concerned, they say that this company is the key beneficiary as they have leadership position in this particular industry. In fact, if you look at the order inflows that have happened in FY16, almost 95% of the orders that were floated for boilers were taken up by BHEL. And that's the reason they expect that the company can see a 40% year-on-year growth for FY16 in their order inflows.
I won't write off the power sector, and yes, if you see the fresh order, which the company has got in this about maybe this last 3 or 4 months, they have got the new orders of closer to about 20,000 crore, closer to about 5,600 megawatt. That means the order book, which was at about 1 lakh crore for the company and seen remaining stagnant, because what has happened in Q3, there was no order inflow except of 2,500 crore. And they are getting a fresh order of about 15,000 crore in Q4 alone. So the moment let this Q4 results come, and I won't be surprised to see the share prices moving up now by about maybe 10%.
However, not all analysts are bullish on BHEL. There are analysts who have concern about margin profile of the company given the slow-moving orders that it has. In fact, Rakesh Arora of Macquarie told us that the company might not see profits in foreseeable future, and it is better to avoid this stock. Let's hear him out as well.
We have a negative view on BHEL. We don't think, BHEL will be able to come out of the hole they've dug themselves in for quite some time. And while, yes, there are going to be few orders from SEBs here and there, but, unlikely BHEL would be a profit-making company in the foreseeable future. So would avoid that.
All right.